Hey guys, welcome to another video. This one is an update on one that I did a while back. I'll link it up above here. And it was a video on THCB, that's the SPAC that is merging with Microvast. They're a battery manufacturer for EVs. And at the time I did that one based on a request. Before the investor presentation was released, it was back when the initial rumor and the letter of intent was circulating and that kind of thing. So I pulled together the information that I could find, and I didn't like the story at all. I mean, the bear case absolutely won out in that one. There was a lot of red flags that I'd found that led me to believe that although the company had some pretty good technology, the business itself was in really rough shape, and I didn't like the looks of it at all. There was so many warning signs that my thought was to stay away. So now the investor presentation is out, and so we have a lot more detail. There's some new information, and so again, by request, I'm going back and I'm updating my review on Microvast because of all this new information that's out there. And so I put together some points that should address the update and the additional news that's come out. So you might still want to go back and watch that old video before watching this one though, because there is some more in-depth information, and this is really just touching on the things that have changed. It's not really the complete picture. But in any event, let's get into the update. Okay, so first off, let's address all the news updates. And there's been some pretty big news items that have come out recently that have affected Microvast and the stock price of THCB even prior to the merger. So one of the news items is the completion that they have announced of their plant in Europe, in Germany. You know, back when I looked at this originally, it wasn't really clear as to whether this was another one of these headquarters sort of facilities, which is really just a facade. You know, it's sort of a mailing address. It wasn't clear if there was actually a production facility there. It looks like there absolutely is, though. It's not just a European HQ. It's also a production facility that, as they say here, is going to be expanded with additional jobs being created, and they are going to be producing batteries in this location. So I think this is really good news. This is a pretty strong commitment to production capacity. So this was Microvast pre-SPAC actually making this investment in production capacity in Germany, which is a really, really good story. And I think it's an even better story now that they've completed it and they have this production capacity. And now at the same time, they're announcing a new plant in Tennessee. This one is a bit of a collaboration with an EV manufacturer called Oshkosh. They have invested $220 million in the project, and there's an additional 287 jobs being created here. What's interesting about this partnership as well with Oshkosh is that Oshkosh took a $25 million equity investment through the PIPE in the SPAC deal. So it's not a huge amount of money, right? But it actually puts some skin in the game. So it's not just one of these feel-good partnership, strategic alliance kind of announcements. There's some money on the line. And these guys are actually appear to be collaborating very, very closely, which I think is a key milestone for Microvast to meet. You know, back in that other video, I was really concerned about their ability to make inroads in the US market, not to mention the European market. This is a really good sign that they're capable of creating real working relationships with US manufacturers and really building up that pipeline and the supply chain in a meaningful way with a company like Oshkosh, where they've managed to strike a real partnership. And now the other huge news here with Oshkosh is that they actually scored a big win with the US Postal Service. So they basically appear to have stolen basically a contract that appeared to be locked up by Workhorse. And, Oshkosh has actually won this one in partnership with Microvast. So Oshkosh is going to be supplying the EVs to the Postal Service. Microvast is going to be supplying the batteries in those vehicles. And so it's a huge catalyst here for the stock price in both companies, more so in Microvast through the THCB stock surge that happened the other day. Really, really big spike in the price. I think people are pretty excited to see a real deal. And this is a big one, right? It's not only big, but it's long reaching. I think this is a 10-year contract. So this is going to provide nice, stable government contracted revenue for both these companies into the future. It's a pretty big vote of confidence that should make other customers more confident about doing business with both these guys. Now, I've gone through the investor presentation update and I pulled out a few key points here, I think, that are worth updating from my previous video. One of them had to do with battery density. You know, at the time, based on what turned out now to be older information that I had come across, I had gotten the impression impression that battery density was really lacking in Microvast technologies, mostly because they were coming at it from a commercial EV space where battery density didn't really matter. And those big, heavy, less dense batteries didn't seem to me to be very appropriate for passenger EVs, and I was concerned that that would limit their ability to expand into that market. So I think the situation has changed. Microvast is claiming to have a much greater energy density capability here. And, you know, if you compare them to Romeo, even Romeo is not talking about getting to that kind of energy density until 2025. I believe from what Microvast is claiming here in the investor presentation that they have this energy density right now. And if that's true, then I think it puts them in a really, really good position to pivot to passenger EVs and open up that additional addressable market for these vehicles. That should be a huge catalyst for this stock go forward, because I think it might allow them to start making those contract wins with EV manufacturers and start supplying batteries into that market as well, and open up a brand new revenue stream that in the past I didn't think they were going to be capable of. Back when I looked at these guys previously, one thing that stuck out to me is that their technology was really, really good, you know, and I think it's reiterated here in this slide. I buy into what they're saying in this slide. I think they're correct. You know, they're able to make these incremental improvements over the last few years in energy density, in the life cycle of the battery, and they're still decreasing charge time. So if you couple all of those things with some of the underlying characteristics they've had in the batteries all along, which is the fire retardant properties within the cells and some other features, I think they've got a real winner here. Like I believe them when they say they absolutely do have best-in-class battery cell technology, and I think customers are going to see that go forward, and I think it's probably going to contribute to more contract wins like the one they had with USPS. I really like this slide where they address vertical integration, and I talk about this a lot. I think it's so important for a company to have full vertical integration across the full scope of its business, because just like Microvast is saying down here at the bottom of this slide, it enables faster product development. They can customize according to client needs, and they can more tightly control costs and recognize higher margins. These are all really, really key important elements of, you know, full broad scope vertical integration. If you don't have this, and if you only manufacture or control a part of the full value chain, then you're more vulnerable to changes in, you know, your downstream suppliers and your upstream customers, right? So by owning the full value chain here through really solid vertical integration, your business is way more healthy, and it's in a better position to generate returns go forward. So I love this slide, and I think they're right to claim this. I think they absolutely do have some pretty impressive vertical integration in the business. So they have a slide here on the pipeline and what they have in the sales pipeline, and they're trying to build some revenue projections based on this. So I have a couple of thoughts here. You know, one is they're identifying the total opportunity at $5.9 billion. They're coming up with this $4.1 billion number of total probability weighted pipeline, which I guess means they think they have a good chance of scoring contracts to the tune of $4.1 billion. You know, to my mind, neither of those numbers mean anything whatsoever, right? Like anybody could dream up a number like that and say, yeah, we'll probably win that business. So I don't put any stock in that whatsoever. So those green numbers down there in the revenue graph, I don't really put a lot of stock in those. However, the total contracted revenue that they actually do have in the pipeline to the tune of $1 to $1.5 billion. They don't say it in this investor presentation. I think it's because of timing. This came out prior to the announcement of the USPS deal, but I believe that this contract revenue is probably a large part of it, if not all of it, is going back to that USPS contract. And so the blue portion of those revenue bars, I think, is dependable, right? This is contracted revenue. It's in the pipeline, and it extends out from 2021 into 2025 through 2027. So I think that's a great story, right? They now have some locked in contracted revenue to keep them going over the long haul. And, you know, I'm reasonably confident that they're able to recognize some of what they call this probability weighted pipeline. I don't know how much, but I feel pretty good knowing that they have at least a solid base of revenue go forward. I didn't like the debt situation that they appeared to have in my last video, and we're seeing some of the details of it here now. You know, they're looking at what they're going to get in the deal in terms of cash on the balance sheet. Some of it will go to debt repayment. So I had to dig it out of the fine print here, but it looks as though they're carrying $170 million of debt forward from the old days. There's an additional $40 million of incremental debt from merger expenses and that kind of thing. That's steep, but I guess it's to be expected. Cost of doing doing business in the world of SPACs. And they are going to repay $30 million of this debt. I would imagine these are probably notes that are due now, if not overdue, from the old days. So, taking this much debt from the old days go forward, it's going to be a bit of an anchor around them. It's going to drag them down a little bit. It would be great if they had a better story to tell on the debt situation, but it is what it is. So I think that's the story go forward. I think if I were to invest in these guys, I would want to keep a close eye on their total debt load go forward, and ideally this number should be shrinking and not growing. And so I have a follow-on point to that debt situation. One thing that they're not giving us any information on whatsoever in this presentation is the planned capital expenditures, the CapEx and the OpEx that they're going to have go forward. So how much money are they going to burn into the future? They're heavily focused on revenue. We have no visibility into what their expense is. I think that they've got a lot of capital spending to do based on the plant expansions that they're going to have to incur. They have to invest a lot more in R&D. That's a sunk cost that's coming up for these guys. So, they hint at margins here, but they don't really tell us how much money they're going to be spending. So I think on the very first quarterly report that these guys release as a public company, that's going to be the first thing that I'll be looking at is what margins they've been able to recognize and what's the CapEx look like go forward. My concern here would be that they're going to have to invest a ton of the money that they're getting here onto the balance sheet in order to recognize this growth, and that could push profitability a lot further out than we would like, especially if some of the numbers here in green don't materialize the way that they're hoping that they do. So overall profitability is still a bit of a question mark in my mind. Okay, guys, so let's summarize. In terms of an update, they have addressed a lot of the red flags that I saw in my previous video. I think the story has gotten a lot better. I'm a lot more confident now that they do have a solid business. So I think if you take what I would consider to be a reasonably good business, and if you combine it with what I think is absolutely fantastic, best-in-class battery technology, and you put the two together, I would actually say the bull case is pretty strong here now for these guys. I think I would want to keep a really close eye on the financials go forward. Maybe I'd like to see some good solid quarterly earnings numbers come out of these guys before I would say, yeah, they're fantastic. They're best in class all around. But based on these updates, I'm feeling a lot better about them than I was previously. So that's the deal, guys. I hope it helps. Please throw the video a like if it does, subscribe, ring the bell, and I'll see you in the next one.